Top 10 Pieces of Investment Advice from Warren Buffett. Investors can avoid some of the usual pitfalls that harm returns and imperil financial goals by remembering Buffett's investment recommendations. Here are the top 10 advice from Warren Buffett. 1. Invest only in the things you are familiar with. Getting involved in ventures that are too complex is one of the simplest ways to make a mistake that could have been avoided. Never put money into a company you don't fully comprehend. 2. Purchase reputable businesses with enticing long-term potential for expansion. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Businesses with higher returns on invested capital have the ability to compound profits more quickly than those with lower yields. Time is the friend of the wonderful business, the enemy of the mediocre. 3. Warren Buffett adheres to the buy and hold philosophy. He is known for saying, if you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. If the job has been correctly done when a common stock is purchased, the time to sell is almost never. And the stock market is designed to transfer money from the active to the patient. 4. Excessive diversification is not always the answer. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. 5. As investors, we must determine whether a news story actually affects the long-term profitability potential of our company. If the answer is no, we should probably go in the opposite direction of the market. For example, Coca-Cola drops 5% following a disappointing earnings report due to temporary factors. Consider buying the stock. The stock market is a volatile and dynamic force. We must be extremely picky about the news we choose to hear, much less act on. 6. You don't need to be a rocket scientist. In investing, the person with the 180 IQ does not always outperform the one with a 100 IQ. 7. The stock market is filled with individuals who know the price of everything but the value of nothing. Price is what you pay. Value is what you get. A company's expected future stream of cash flow won't change just because stock prices fluctuate in response to investor sentiment. 8. Investing in the stock market is not a get-rich-quick game. Beware the investment activity that produces applause. The great moves are usually greeted by yawns. There is no need to try and be a hero or impress anyone with our investments. Boring can be beautiful. 9. Put 10% of the cash in short-term government bonds and 90% in a very low-cost S&P 500 index fund. 10. In all of his shareholder letters and sporadic interviews, Warren Buffett stresses the significance of only funding management teams that are dependable and capable. Simply said, Warren Buffett chooses his company partners and managers with great care. And so should you. Their actions have the potential to make or break an investment for many years to come.